Hey guys, this is Andrew for tradingsenses.com, and in today's video I want to talk about gold. Alright, so once again on this kind of charts, when I want to have a long-term view to understand where we could be possibly heading and for what reasons, I like to use a logarithmic scale. So here I'm using a logarithmic scale, and I'm gonna watch, for example, what happened in the past 10 years. So once again, as I said before, I don't really like horizontal trend line, even if they're helpful. But so let's make one here. But you see, it has not been actually playing out here, or little. It got above it, and I'm going to show you why it came here, actually using my tools, using what I think is working, because I'm using it for a long time, and I'm going to show you how in this video very quickly. I don't want to spoil you guys, but it's going to be about Fibonacci. Again, you're going to see. So basically what happened, let's look at it even in the longer term. All right, so I take a weekly chart and I go back here. Okay, I have here, guys, 40 years of data on gold. 40 years of data. You can find some very interesting behaviors. So first thing, I like trend lines, so I'm gonna make a trend line here. You see, this is giving you so much more information. Once this is broken, things just change very differently. And once again, you can see we break it, and guys, here we had a retest. I always say, don't buy the breakout, wait for the retest. The retest almost always happens. You wait for it. You need to not to FOMO. If you FOMO, guys, you're buying here, and then here you might be cutting your positions because you're stressing, because you're losing money. So you're not buying the breakout, you wait. So here you could have bought it. Anyway, this was in 203. Let's go back to what is happening right now. So we had this first move, all right, bearish one for 20 years, and then we had this strong move up where we were trading above the 200 period moving averages. Basically the 20 and the 50 were playing, were acting as support the whole way up. So those were interesting to look at. Then 2012, same bearish trend for a couple of years until 2020, guys, where things have changed completely. So here I started to be bullish on gold for the same reasons I'm giving you since the beginning. I'm doing these videos. The market is unfolding in waves, so you need to spot the waves, and once a wave is done, you know that we're going for a new one, and then you use Fibonacci to know how far we can go. So once again, if you like what I'm talking about, hit the like button, subscribe to the channel, because I'm gonna give you guys some very amazing content in the coming days. I'm gonna do some videos on Fibonacci, on Elliot wave. If you subscribe to my newsletter, you're gonna receive a free video, but I'm gonna post some videos for free as well on my YouTube channel. Please subscribe. So let's go back to this chart. Here we were bullish at 1300, and the target was actually here. I'm gonna show you why, guys, as I always do. Fib extension. If you use Fib extension of this move and you apply it here, because once, I don't want to do back trading too much, but you're gonna see in my videos that the levels I'm gonna give you right now are gonna actually act as support or resistance levels in the coming weeks, month. You're gonna see that. And so here I could have found this level by using the golden ratio. Look, it's exactly 2080 was the golden ratio. What is the maximum here? It was 2030. I would have missed it, but I would have been very close. So if I would have put the target just below this golden ratio, I would have bought here and sold here. It would have been a very nice trade. This is behind us. What is coming? What is coming, guys? Where are we? Once again, we're not going to use the 200 period moving average as a support level, because as we saw, it didn't act like this for the 10 years bull market we had here. We're going to use the 50 and the 20. All right, those are the ones we are going to use. So now we just broke the 20 because here we're very extended. So I'm bullish on this because I think that the economic outlook is actually not so nice, despite all the efforts that are made by central banks to sustain the economy by injecting money and reducing the taxes, stuff like this. I'm still convinced that some bigger damage has been done to the economy and that we're gonna feel it in the coming month, years, decade. Yes, decade, guys. So I think that gold is gonna push higher because it's a safe haven. So I want to buy this. I want to buy this, and I would buy it like around the 50 period moving average. And if it goes lower, I'm gonna put more. I wouldn't put a big position, and I wouldn't use a stop loss because I want to have this in my portfolio. That's it. Actually, I have some already, some physical gold, but I want to have some paper gold as well. So here, my level to buy is 1750 or 60 or even 1800. All right, I could buy very soon, and if it goes lower, I'll buy more. What are my targets? My targets, as usual, I use the golden ratio, guys. So the 1-to-1 relationship brings us to 2700. So this would be my first target. I could offload some of my long position here if we reach this level by the end of 2022. But my real target, guys, my real target for the coming decade is 3700. All right, I think the gold is going there, and roughly it's going to use the same growth it had here. So that's why projections are very useful, because if I project this move here, we're going to go to 2700 roughly in 2023, something like this. 2022 to 2023. So yeah, and where could we put some stop loss, or could we think that things are turning, is if we break this 200 period moving average, which is now at 1500. All right, so let's say it comes like somewhere here. Okay, so and the market is going like this. All right, and here we break the fib level 38.2, and we break the 200 period moving average around 1650. Maybe it would be in October 2021, so July, whatever, you know, within 6 months, something like this. Then I would reconsider everything. I could turn bearish, but I need to have some more information about the economic outlook that it's going better. So I'm going to look at the inflation, and I'm going to look at the growth. All right, because what is the only thing that can go against the Fed plan is if the inflation is going too high. All right, because they're printing too much money. So one day the inflation is gonna come back to the economy brutally. Right now we have the inflation in the assets, in, for example, the market, in everything that people invest money, but we don't have inflation in the real economy. And when this inflation is going to come, so for example the price of bread, you know, things like this, then the Fed would have no other choice than raising rates. And look how indebted they are, all the countries in the world. If the rates are going higher, I can tell you guys that we are in big troubles. So I'm gonna look very carefully what are the inflation prices, and if suddenly the inflation is much higher than expected, it's the time to cut your long positions on the equity and to think about buying more gold, more crypto. I don't know. That's it for me. I hope you guys enjoyed this video, and as I always say, tight stop loss and stay close to shore. See you guys.